I worked a few little manual trades when I see certain price patterns, and I shoot a video on this about once a quarter. Maybe I figure I'd do it right now. So let's shoot a little video on M and W patterns, and they are very powerful in my opinion. So M and W patterns, and I'll show them to you on two charts. So I like M patterns where the top is equal or the second portion of the top is lower. I like W patterns where the bottoms are equal or the second portion of the W is higher. I don't like any other pattern but that. I just find that they work best. So today we had a lot of M and W patterns. Like they were all over the place. And I just hit one to pad up one of my accounts a little bit. So I hit this one right here. And when I was in the trade, and I wasn't in very much size, it had another little one, and I blipped out kind of right as we were trading down to that area because I needed to go do something. So anyhow, and I wished I would have stayed in and had a big drop, but I don't care. I don't. When I get out of a trade, then I see something like that, I don't even care. It's like I'm too old to worry about that. I got my hits for the day. I'm good. And but let's talk about M and W patterns. So this morning we had a really nice W pattern. So we had this highest or the worst choppy day in the first opening hour statistically in the NASDAQ since the beginning of 2025. So the amount of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we had 11 cycles in the first hour of trading, 9:30s right here. It was about 10 cycles. I think it was 10 cycles. I think the worst other day we had a 7 cycle day, and we've had a few fives and sixes, which are fives and sixes are no big deal, but that's very abnormal. And I covered it in the prior morning video. There was institutional level distribution going on, and they were playing all kinds of games this morning since the market was near and peeking its head above recent highs. So anyhow, but I'll show you a pattern. So let's get into some of these patterns. Let's take a look at this one. And this is all, overnight session, pre-market. But this pattern right here, we were cycling, wondering, is the market finally going to break down, break through the 25,000 level and break down? Are we going to go up, get a new high over recent highs? As you can see, recent high, another slightly higher high, another slightly higher high. We had a heck of a W pattern right here. So we came down, tested the 25,000s level. So it held pre-market, came right down, tested, and we had a heck of a W pattern with lift. And so if you're wanting to be a buyer and to see if the market would break out above these recent highs, that was a pretty nice W pattern right there. And, the market is stair-stepping higher. So it gave you an upward tilted W, which typically shows good strength, good momentum building. Institutionals come in, they burst a buy program activity, they turn it off, market settles back a bit, or sometimes they even push it down themselves by design so they can burst in a bigger buy program activity. Buy program, they're buying baskets of stocks, futures, options, all in concert, all at the same time, all automated. So that was a nice W pattern. And then right off the high of the day and higher than recent highs, we had an M pattern. So I was working shorts only this morning on the automated because of where we were at. And I saw that we were, basically right below that prior high. I was hoping we would peek our head up, give me a nice short, and then I would catch maybe be one and done on the day. But no, I got in a whole bunch of shorts before they finally got some that had some legs, and actually ended up getting some good profits as some of these legs started to have some pretty good moves. But you can see right here, right off the day's new high, we range extended higher, we came down, lifted, and rolled over. So there's a little bit of an M pattern right in there with a pretty heavy downward tilt. So up, down, up, down. So that was a pretty nice W pattern. And then right here today, we broke through that 25,000s level. It was kind of scrubby. Institutionals were coming in trying to buy this thing and hang on to it. And then we came up and made this nice little M pattern and rollover. And then we had a pretty, significant sell off from there. So, here's that 2,500 level. Obviously, it was a key level on the day. We bounced off of it once, twice. Then we finally break through. Then it's now kind of acting as resistance. The market now has been, sequentially stair-stepping lower. And we had a little bit of news that was odd that Trump was on the phone with Putin, started there. So markets weren't sure what that was about. So in other words, in a sequential stair-stepping down area of price, you got an M pattern on a short. So, not a bad area. And then you get the mom signal. So you see the M pattern, you can work it with scalp dots, or you see the M pattern or W pattern, with scalp dots, or you can wait for the momentum signal, mom signal out of the pattern, your choice. Then that wasn't it. We had a little bit of a W pattern here and a bounce. That was a nice little compact, very sharp looking little W pattern. It got some lift and then it stalled out. And if I'm not mistaken, we might have been at a level here or close to it. Let's go look laterally to the left. No, we were right above recent bounce area from the prior day. So we weren't quite down to support yet. We had a little bounce there. We did have some descending pivots. So that's kind of showing, market maybe putting in a bear flag to go lower. But then we had this nice W pattern with lift. And that's an ascending W, so that's really showing some strength. So institutionals were able to hold this area because retailers sure in the heck don't hold markets, but institutionals can. They can flow in liquidity to defend an area and move price away from that area. And we got a nice little W pattern, and then they juiced it with some buy program activity. So nice little W pattern there. Then we get a little bit later in the day, and we had a really nice M pattern. We had a couple of them like sequentially. So I wanted to short the market again, and I was, I just wanted to do it manually. So anyhow, here's that area. The market was stair-stepping lower. Then that was kind of the last area that held. And then the market worked its way higher, almost came up to that area, gave us a nice little pivot. And then right here, we get an M pattern, a bigger one. And on the tail end of that, we had a little micro M pattern. So I hit that short right in this area and put my stop right at the scalp dot. I thought, I'm way up on the day. It's either going to work or I'm going to give back, $200 because I wasn't trading very much size. So then it ran down, and then we had another little micro M pattern continuation, and then we had the big drop. So I was just checking to see, if I got in there, if the market would at least come back to this area. And it finally worked its way down there. So I padded one of the accounts just a little bit with a light manual trade. Now we have more of these on the day. We came all the way down to a really, really, really key level right there. Let's move that up right there. That was a key level from yesterday. What do we get out of that level? We had a W pattern. Now, when I see the market drop this hard and this linear, come to a key level, am I all excited to get in and buy it? Not me. That's not my game. I don't mind if a market runs up to a key level and gives me an M, I'll short that all day long. Markets selling off, especially coming off of the upper range of the market's recent trade area, not my idea. But it was a nice pattern. And if you got into it on a scalp dot or the waited for the mom signal, it lifted a bit and then stalled. So, if you got to stop in place, you leave it on till the stop, or if you don't see follow through, you can flip out of the trade at any time. So anyhow, just realize there's M's and W's in the market, and who knows, we're really close to the end of the day. I'm never in love with trading at 2:34 in the afternoon U.S. Central Time, but we might end up getting a W pattern lift, and institutionals might juice it up a bit into the end of the day to clean up the mess. I think it's more likely we go down and test here before the end of the day, but you never know. They can just come in out of nowhere and run buy program activity and just zip it up 100 points plus in no time at all. And we see that over and over and over again. And I can go day by day by day, and there's M and W patterns at key areas continuously. Here was that high pivot after that big, there was just massive buy program activity by multiple institutions. It was almost like they were all winking and nodding at each other. They ran the buy pumps and then they just completely went off. And right at the very tail end of that, you can see we have a little bit of a scrubby M pattern and then rollover. And we dropped down here. The market lifted a bit, tried to bounce. And before it tanked again, what did it give us? It gave us a little bit of M pattern and then it just ripped down ugly. So yeah, M and W patterns can be reversal area trades, or they can be really solid trend continuation trades too. So anyhow, just wanted to cover M and W patterns. They're in all the markets. You can see them pretty darn good when you're using Renko candles. I mean, you can see them too when you use range bars, or you use, tick charts, volume charts, even some time-based charts, but they're a little bit more crisp on this type of chart. Now let's go look at my typical scalp dots chart, and I'll show you that you can see them over there too. Now, since this is more of a manual trading chart for me, I have it set up in a certain way. High over recent highs, big fat M pattern, rollover. You can see that little micro one that played out earlier, trend continuation. Some W patterns in here, that one stalled out. But look at that one, we came above the bands. Remember I said I threw on a little manual trade? Look at that, just beautiful. We go outside of the bands and we get an M. And we just bounced after, pretty significant selling. And this was unable to come out and take out this area, and we show weakness again. So you can see the market, came outside the bands, cycled a bit, bounced. But you can see right here, you can see the market is decelerating in the bounce and then rolls over in a beautiful run down here, back to the other side of the bands. So it's always battle of the bands, trading from one side of the bands to the other, to the other, to the other, just over and over and over again. Just back and forth, back and forth. That's exactly how we trade institutional FX, back and forth in portfolios of 12 to 16 instruments. So if you have any questions, info@gridalgo.com, and there's our website. Have a great trade day and more content tomorrow.